Chinese real estate market is struggling after Evergrande and Country Garden, China Vanke is the latest to feel the tremors. With the sector contributing nearly 30% to China's GDP, its troubles have prompted a $138 billion government bailout, raising concerns about the country's economic stability amid mounting debt and failing demand. Take a look.
Remember China's massive collapse of the real estate giant Evergrande? It all started with that. And then there was another player called Country Garden. And right now there's a smaller player in China's popularly called defunct real estate market. China Vanke is now feeling tremors. China's real estate sector is in an absolutely messy spot. Real estate has been a major driver of its economy, contributing almost 30% to the GDP. But reports are now suggesting that that share could come down to about 15% in the next 2 decades. But even that 15% seems a bit of wishful thinking if you were to look at the numbers as they stand today. Now, last week, the Chinese government announced infusing a $138 billion stimulus to bail out the crashing real estate sector. The bid is to coax state-owned enterprises to buy 4.2 billion square feet of unsold houses. 4.2 billion square feet is massive, and I'll try to put that in perspective for you. If you were to divide 4.2 billion square feet by, let's say, 2,000 square feet as an average area of one flat, we're talking about, give or take, 20 lakh unsold houses in China. Imagine the scale. Now, the Central Bank of China has offered to provide a loan of about $42 billion to the states in China to buy these houses. But there seem to be at least 3 problems, if not more, with that plan. Number one, the local governments in China are already reeling under a $9 trillion debt. So any additional loan is not something they would want to take on. Number two, what would local governments actually do with these houses even if they were to buy them? After all, at some stage, they would want to sell them off. And guess what? China doesn't seem to have any buyers. And number 3, real estate players feel that stimulus offered by the government is too little and may force them to sell the unsold houses at a much lower price than they would have actually wanted to. This is leading to a massive sell-off in real estate stocks in both China as well as Hong Kong. With all this, one thing is fairly clear. China has no money to indulge in buying houses. Supply outweighs demand drastically. But cut to India and the story is the exact opposite. Demand is much stronger than supply in India, and the devil is in the detail. In contrast to China's crisis, India is actually experiencing a real estate boom. Currently, India's real estate sector contributes about 7% to the GDP and is expected to grow to about $5.8 trillion by 2047, and this would be accounting for about 15% of India's economy. Now, research reports notwithstanding, the trend line in India seems to be very clear. Look anywhere, speak to any broker, property prices are only rising. House prices in Bengaluru, Delhi, NCR, Ahmedabad and Pune have witnessed a double-digit growth in the Jan to March period this year compared to the same period last year. Unlike China, unsold inventory in India is actually dipping. Pune saw a dip of 10% or so in unsold houses between last year and this year, while the number of unsold houses in Delhi NCR are down about 8%. What does this mean? This means that people are in a position to buy houses in India. Robust demand, especially in premium and luxury housing, is driving sales according to industry body CREDAI. And all this at a time when it's not just the prices which are high, but even interest rates. When you take that house loan, interest rates are also the highest they've been in recent past. Now, last year, India sold about 4.5 lakh crore rupees of houses. I'll give you some numbers. Last year, India sold 4.5 lakh crore rupees of houses, and if this were to grow modestly at 10% increase in price and 10% increase in the number of houses sold, we are looking at closing this year at about 5.5 lakh crore rupees. What is this 5.5 lakh crore rupees when converted to the dollar at an exchange rate of about 84 rupees? We are talking about $65 billion worth of housing is likely to be bought in India this year. I'll take you back to the China comparison. So while China is pumping in more than $130 billion to boost sales artificially, India is already organically buying $65 billion worth of houses with no stimulus whatsoever. Now, India's economic growth and the high consumption data justifies to some extent this property boom. But China's real estate crisis makes one wonder that is the dragon economy really growing at 5.2% when 1/3 of its GDP actually requires a government bailout? I'll leave you with that question.